big one, guys. Module number 7 is titled, How Much Capital Will I Need? Money is like gasoline during a road trip. You don't want to run out of gas on your trip, but you're not doing a tour of gas stations. Tim O'Reilly, O'Reilly Media founder and CEO. All right, guys, now we're gonna figure out how much capital you actually need to run your business. This is the amount of money you've got to set aside in order to be successful. And what I do whenever I coach entrepreneurs through this is to set up an arbitrary amount of time. I usually pick 6 months and have enough cash to get you through that 6-month point. Because at that point in the game, you're gonna know whether you have a demand for your business, whether this is gonna work or not. And that way you're not gonna put in the whole farm into this business and bet everything unless it's going to work. So what we want to do is set up, again, a set amount of money, a set amount of time, and then evaluate at that point in the business. Okay, so here's the goal. There is a book called Simple Numbers, Straight Talk, Big Profits by Greg Crabtree. And in that book, he talks about what a business looks like when it's successful in terms of how much money it's making profit-wise. He talks about the 15% goal. So he says, if you're making 5% on your business, you are really not doing well. This is a business that either needs to be completely readjusted or dropped because it's not worth your time and effort. If you're making 10%, in other words, if you sell $1 of stuff and you keep 10 cents of it, your business is doing okay. It should be able to pay for some of the expenses and the taxes and be somewhat worth your while, but you want to get to 15% or higher. So that's the goal, get you to a 15% profit or higher in your business. Okay, so as we get into these numbers, understand, I'm going to talk to you about how to calculate this profit margin, but understand that that's the goal. Otherwise, if you're making any less than that, this might not be a good business for you to be in. Before we figure out how much cash you need in your business, let's go back to that pre-tax profit concept that Greg was talking about in his book. This is a number you need to really understand if you're going to be good in your finances. So here's how you calculate it. Take the total amount of money you plan to generate in sales. We call this revenue. You're going to minus out all of your expenses, and then you're going to come up with a number that's left. So let's say you have, I don't know, $100,000 in stuff, okay, in total revenue. After all of your expenses, maybe you've got $15,000 left. What you do is you take that number at the bottom, the 15,000, and you divide that by your total sales figure of $100,000, and that gives you your pre-tax profit. In that case, it'd be 15%. All right, guys, you're gonna have to forgive me. I've got my notes in this section because we're gonna go through the ebook itself and look at an exact example here, and this will help you kind of follow along and track what we're doing. So in this example, we're gonna do a second example, forgive me. We're assuming that you have a business that's selling $10,000 a month in sales, and once you add in all of your costs, including your labor, you've got $7,500 in expenses. Make sense? Okay. Now what you do is you take that $10,000 and you're going to subtract out the $7,500. That means that you have $2,500 left of profit. You take that number and you divide it by the $10,000 of total sales. That gives you your 25%. That's all in the ebook. You can follow along. It's all right there. So this business at 25% is doing really well for itself. If you can get more margin than that, all the better for you, but this is a business that's worth your time and your money. So this is gonna lead into understanding your break-even point and how much cash you're gonna have to set aside, because in this example, we know that it takes $7,500 a month in costs to keep the thing going. So you can kind of see where the math is leading us. All right, guys, in order to calculate how much money you're gonna need over the 6-month period, you've got your business expenses, you've also got some personal expenses that you need to consider. So in the ebook, I give you some homework to discuss, well, to identify all of your basic living expenses that you're going to need to cover. This will lead you into what you should be paying yourself as an entrepreneur in the beginning stages of your company. But here I've given you examples of mortgage, food, transportation costs, any necessary bills, those kinds of things. Notice that again, Netflix is not a necessary cost right now. Going out to eat every night, not a necessary cost. But add all of those up. That'll help you figure out what your wage needs to be in order to keep the lights on in your home. So let's assume that your living costs total $6,500. Again, this is all in the ebook here, but because you've cut out all of the unnecessary stuff, maybe you've gotten that down to $4,000, and that is a really good job on your part. You've wiped out a lot of stuff that you don't necessarily need to worry about in the new stage of your business. The next thing we've got to do is look at the overhead in your company. Overhead are the costs that you're going to incur whether you sell something or not. So if you're not working out of your home, for example, if you have an office space and you're having to pay rent on that office space, that would be overhead. Any bills that you have there, any expenses that you're incurring there, all of those things need to be tracked and written down and calculated for. So add all of those up. And again in the ebook, I've given you a place to do that. And it looks like in our example, we're assuming that your overhead costs are $3,000. So you've got $4,000 of personal expenses, $3,000 of overhead business expenses, and those are the costs you got to worry about on a month-to-month basis for your new business. Okay guys, I've given you a formula here now that you really need to pay attention to. So in this example, we're pretending that your business is a bakery. And we're assuming that you sell a loaf of bread and that it costs you 30 cents to make that loaf of bread. Now, you're turning around and selling that loaf of bread for $2.50. So what we want to figure out is plug all of these numbers into your into a formula that I've given you to figure out how much you actually have to cover in total cost. Because what you have to understand is your wage, that $4,000 of expenses you have, that's fixed, that's not going to change. The $3,000 of overhead that you have in your business, the rent and all that stuff, that's not going to change. What will change though are what we call your variable costs. That's the 30 cents it costs to make a loaf of bread. Does that make sense? So every time you create a product or a service, you're going to incur costs to do that. This formula will take all of that into account as well to give you a real sort of cash flow break-even point on a month-by-month basis. So let's go back to the notes here. In the formula, we're going to post the formula right here for you. You've got $4,000 of monthly living expenses plus $3,000 of overhead expenses. That goes on the top part of the formula. Below that, we're figuring out your margin. We're dividing that number by your $2.50 sales price for your loaf of bread. You subtract out your 30 cents of cost, and then you divide that figure by the sales price of $2.50. I know it's super complicated, but the formula is right there and right there. What it does in this example, though, is it gives us a total break-even cash point, $7,954.54. That's a mouthful. This is why I love accounting, guys. It gets super complicated, but you've got to figure this stuff out. Now, understand this. That's the number that we have to generate in total sales in order to cover my living expenses, my overhead, and the cost of all of the bread that I've got to make as I sell this stuff. A unique point to pay attention to here is that if I have to sell $7,954.54 a month of bread, and I sell each unit of bread for $2.50, you divide that, right? And that means that you have to sell 3,182 loaves of bread a month in order to keep your doors open and cover all of your costs. That's also a useful bit of information. That's figuring out all of my costs on a per unit basis. And then you can stand back and get honest with yourself and say, can I really sell 3,100 loaves of bread a month? Is this business even going to work? But that's a number you need to know so that you can kind of plan for the future. All right, last but not least, we want to take this number, this monthly figure that we've calculated, and times that by 6. You need that much cash times 6 months to keep your business open for, okay? So $7,954.54 times 6 months. That gives us a total of $47,727. It's been a long day making videos, guys. Anyway, a little over 47 grand, that's what you need to run your business. Now, that's running tight. We've calculated every cost, we've factored in the margins, all of those things. This will allow us to have enough cash. But what about the unexpected? Things are going to happen that you don't know will happen, good, bad, and or ugly. And so I challenge you to actually add another 20% to that so that you'll have enough of a nest egg there to keep your business going. That puts you at a little over $62,000. Hey guys, sorry to jump in and interrupt the video, but you need to understand something. When I filmed this on set, I was running numbers through my head, and when we calculated the total capital that you're going to need for your business, I came up with $62,000. That is actually wrong. It's a little over $57,000. Really what we're trying to do is we're trying to take your total monthly capital need and we're adding that up over 6 months. And then I wanted to add that I wanted to add 20% on top of that. So it actually comes out to being $57,000. So anytime I say $62,000, forget that, It's actually $57,000. But that's just to make the example more accurate. And also to help you out, because we are running some math here, I have created a calculator in the download section below where you can go in and put all of your information in there, and it will calculate your actual capital need for your business. And we're going to jump to a screen share so that you can see how that calculator works as well. So let's get into that. All right, guys, this is the capital calculator that I've built for you in Excel. Now, this is really easy to use. The hope here is to take something complicated and make it super simple for anybody to kind of crunch through the numbers to figure out how much capital you're going to need to safely get through the first 6 months of your business. Now, you'll notice that there are two tabs. There's an example tab and then the actual calculator. They're the exact same tab. I've just filled out the example tab for you so you can see how it works, okay? Now, I am following along with a lot of the information I've used in the videos and the ebook. These numbers should all be similar. So you've got 3 boxes here I want you to pay attention to. Step 1, Step 2, and Step 3. This is where you enter your data. In step number 1, you're going to list your necessary personal monthly expenses. So I've given you an example here. Let's assume you're paying $1,500 in rent or mortgage or whatever. You need $500 a month to live on for food. You've got insurance, fuel and gas, and whatever. Now you'll notice I've also given you a few columns here, or rows here for other. You're welcome to type in here anything that you want. We'll call this stuff. You're spending $1,200 on stuff. Anyway, you get the idea. Try and make this as bare minimum as possible because you really need to scrimp and scrape and save to put money towards your business. But this is what it takes to take care of you and your family. Step number 2 wants you to list out your business costs, but do not include the cost of making your product or your service, okay? So this is where you're going to put in money for a marketing budget each month. Now I've put $2,500 here. It is whatever you want that to be. I do suggest, however, though, that you really focus on trying to invest in marketing. If you're putting 50 bucks into marketing each month, you're just going to not get anywhere. But that's neither here nor there. That is not a part of this discussion. Just know that that's what we've put in for this example. Now, if you did have an office space outside of your home that you were working on as well, maybe you would have to pay rent here. I'm assuming that's not the case with you. You're working from home for the first few weeks or months or whatever. Business insurance, business utilities, and again, rows for other that you might have incurred in your company. You'll also notice that each of these boxes totals up the numbers that you're putting into each of these cells. Now, once you do that, step 3 is the most challenging, and this is where this calculator really starts to shine. So what I want you to do here is we're going to figure out your, well, we call it contribution margin or your gross margin, because that helps us figure out how much cash you're going to need. So think of it this way. In step number 3, I want you to consider just the cost and the sales price for one of your products or service on average. So let's assume you're starting a lawn mowing company. Or no, actually, let's stay with the example. I'm sorry. We talked about being a bakery. And we said that you charge an average of $2.50. I almost said $200. That's an expensive loaf of bread. Anyway, $2.50 for a loaf of bread. That is your price tag. Now down here, I want you to list all of the costs that you incur to make one loaf of bread. And I've given you some examples, so you're going to have some direct material. In this case, you'll have 30 cents, and maybe that's the flour and the salt and whatever else it takes to make bread. I'm not quite sure. You'll also want to list down here any direct labor that you're experiencing that is not your own wage. Now again, I'm taking care of your wage over here in step number 1. This, just so that you know, this calculator is not meant to calculate, like, you know, complicated break-even points. It's taking into some unique assumptions that you're on your own, you're working from home. Down the road, as you start getting more employees and on and on and on, you're going to want the expert in your life, your accountant or whoever, to help you build a new model to begin calculating capital requirements going forward. Because your role and how your wage is being used will change throughout the business. So just understand that this cell right here where it says labor, this is other people. So if you've got somebody that's assisting you, which you probably don't since you're a brand new business, but if you do, how much money do you spend in order for them to make one loaf of bread? Is it 5 cents per loaf of bread? Is it $1? I don't know. You'll need to figure that out. You'll also have other rows here for any other costs you incur to create one loaf of bread. This cell here totals up all of your what we call variable costs, and we call them variable costs because if you sell a loaf of bread, your business incurs that cost. If you don't sell a loaf of bread, you don't incur that cost. They're variable. They change based off of how much you sell. Whereas these costs over here, they never change unless you make a decision to do so otherwise. But those costs are just going to always be there month after month, regardless of how many loaves of bread you sell. This yellow box down here is a calculation. You're not meant to touch this box, but what it's showing you is your estimated gross profit per unit. In this case, it is $2.20. Obviously, all that's doing is taking your sales price, reducing out your variable costs, and giving you what we call your gross profit. It's also calculating your gross margin. So for this business, it is 88%, which is quite a good gross margin. But again, that just depends on what industry you're in. This is a calculation. All we're doing here is just taking your $2.20 gross profit, dividing that by your sales price. That's how you get to the 88%. I will tell you that this is one of my most favorite numbers to track in any business, and is one of the most important numbers that you as a business owner should always know about your company. So this is the cool part about this calculator. Up in this blue box here, it's spitting out some information to help you make better decisions as a brand new business owner. It's telling you what your current break-even cash point is. Now, you know, accounting is a weird world, guys. There are accrual accounting tactics. There are cash-based accounting tactics. All I care about right now for you is cash-based, because you are so hungry for cash since you're a new company. I'm trying to tell you, I'm not taking into effect any word accrual stuff. Like I said, once your business gets more complicated, you can deal with that down the road. Right now, we're just looking at cash in, cash out. What do you got to have to survive? This business requires $7,955 each month to survive, and that's because $4,000 has to pay for your personal expenses. $3,000 has to pay for ongoing business expenses. That totals $7,000. But because you don't get to keep everything that you sell, you have to spend 30 cents every time you sell something. You actually have to generate a little more revenue to cover these two sales right here, and it ends up being an extra $955. You do that, you'll cover the costs in box 1 and box 2. So what does that mean? Now, I've given you another cool cell here. This isn't really applicable to the business. I just wanted you to know, or to the calculator, I just wanted you to know this. What I'm doing is I'm taking your total cash requirement here each month, and I'm just dividing it by your sales price of $2.50. What that tells you is this number here, 3,182. This represents the number of loaves you've got to sell every month in order to meet your cash requirement. I think that's a really nice number to know, because you can step back as a business owner now and say, can I honestly sell that much bread? I don't know if I can or can't, but you need to have that discussion with yourself and make sure that if you can't sell that much bread, if that freaks you out, you've either got to adjust your price up, you've got to try and reduce these costs here, or reduce the costs in these cells or these cells somehow to where you can get that number to a manageable figure. All right, moving on. This cell represents the total cash needed for 6 months. And obviously all I'm doing here is multiplying your monthly cash need by 6 months. Ends up being a little over $47,000. Now that's cutting it tight. We are assuming everything is going to go your way and life is going to be beautiful and there will be no problems. But that isn't really what happens in life. In fact, things almost always go wrong as a business owner. And so what we've done here, in the next row down, we're planning for the unexpected, and I want you to add at least 20% to that figure. So in the video, like I mentioned, this is where I miscalculated when I was on set and I was in the bright lights and all that stuff. I told you $62,000. That's not the case. An additional 20% on top of this gives me $57,273. So that's how this works. Now, once you have this filled out, I want you to play with it and adjust your numbers and figure out how these costs flow in and out of each other. Because let me just show you. Again, you need 57 grand to cover the next 6 months. But what if you sold each loaf of bread for $3? If I did that, I now need 56 grand. Okay, not a big change there, but still it made a difference. What if I could get this stuff column from 1,200 down to 600 bucks? Now I only need 51 grand in order to keep my business alive and thriving over the next 6 months. So I want you to play with these numbers until you're being realistic, you feel comfortable with what's happening, and then you can go out and approach your market with the right amount of cash and stay alive. Okay, Click on the calculator tab down here. This will get you to an empty one. And again, your job is just to fill out the white cells. Fill out these, and of course these ones over here. And then the system will do everything else for you. Guys, I hope this helps. This is a super cool tool. And let me know in the module section on the website if you have any questions. I'll be there to try and help out any way that I can. Take care. Look, I know that was a lot of numbers and it's a lot to take in, but at its concept, at its core, it's not that difficult. We're just looking at your monthly expenses, your business expenses, and your per unit cost. Got to figure all of that out over a 6-month period so that you can set back and save up enough money to successfully start your business. One of the reasons why so many companies fail is because you're entering your business with not enough capital. Imagine having a business that you need 62 grand to start and you go into it with $20,000 thinking, well, 20 grand's a lot of money. You know what, it is a lot of money, but in this case it's not enough and you will fail. So once you figure this number out, sit down with your wife or your husband and ask yourself, this dream, it's going to cost us 62 grand to start. Is this something that we really want to do? Once you're committed to that, you need to be okay losing that money. You need to know that that money is going to go out the door and you may never see it again because not all businesses are successful. But if you can do that as a family and feel good about it, you can now march into your business full of excitement and ready to serve your customers.